Hi, welcome to the Market Alert for Tuesday, the 14th of June 2022. So Black Monday, all hell breaks loose as stocks plunge into bear market, curve inverts, cryptos crater. And then we switched to some very interesting news, and that's the forecast for tomorrow night's FOMC rate increase. And Goldman joins the 0.75% rise and warns it will trigger a recession. Of course it will. JP Morgan now sees Fed hiking 75 basis points, 0.75% on Wednesday, risk of 100% basis points. Panic, yields soar after Wall Street Journal leaker says odds of rising of 75 basis points is obviously possible instead of the forecast 0.5% that we have seen on Forex Factory. And the bank floats outside chance of 100 basis point rate rise on Wednesday. Well, good luck is all I can say if they do go ahead with 100 basis point rise on Wednesday evening, or even 0.75, as JP Morgan says it will create, confirm the recession. I mean, it's already heading that way, isn't it? But news today, we've got PPI coming out. This is forecast to show an increase as well. Again, that's inflationary. And we've got the core PPI as well. That's out at the same time. That's at 1:30. So the market has got to make its own direction today, likely to ease off a bit after yesterday's carnage. Talking of carnage, the gold-silver ratio yesterday moving to the upside. Silver absolutely monkey hammered. No surprise. Mentioned this yesterday because of the strong dollar, and you can expect more of that over the next 2 days as well. So we'll look at that in more detail in just a moment, but let's have a look at the Dow. So kicking off with the Dow, we've got the daily chart here, and you can see yesterday I said to keep an eye on that 30,638. We went through this, the market found support, and overnight has started to retrace. We also went straight through the 89% retracement there as well. If we look at the 30-minute first, you'll see that the market was more active in the pre-market, moving down and then finding support. And then when the Dow kicked off at 230, which is where the white is on the chart there, you can see there was a bit of demand. They tried to move the market up, but it got sold into, and then down she came again until we were oversold. Got divergence, and we can see the green buying coming in. Market retracing back up to where the selling came in just after 3 p.m. and then made its way back down until we found some demand at the close. Bit of a wild one actually, up and down for the Dow. No surprise really, they're doing the best to try and hold this market, which of course you would expect them to. We've got to be able to show that increasing interest rates to the levels they wish to do so is not going to be any issue for the stock markets. It's about keeping investor confidence alive, isn't it? The Dow up 457 already in the overnight move there from, well, sort of from the low of, I suppose, 9 o'clock, isn't it? Is that the 9 p.m. bar? Yeah, it is 9 p.m. So from 9 p.m. last night, the Dow already up 500 points, which, to be honest with you, is going to be no surprise, especially when you look at the daily chart, but more so when you look at the monthly chart, because look what happened yesterday when the market found that low from this low that was put in many months ago. This is March of 21. Up to here, back down to here is an 89% retracement, and that's why you're seeing the market come off this level, and also in the daily chart also moving higher here as well. Okay, let's move on and have a look at the German DAX. And in the daily of the German DAX, we can see we've got demand. We've got it at the 89% retracement that we drew in yesterday. We haven't seen the gap filled yet. We could do today. We could see the market reverse all the way back. As the bad news is out, we could get a 100 basis point increase, highly unlikely, maybe 0.75. But whatever the damage is done anyway, the Fed is screwed because credibility has gone out of the window. Anyway, back to the knitting. We've got the 89% retracement. We've got demand. We're over sold there as well. And in the 30-minute chart of the German DAX, you can see yesterday morning the market was undecided, started off down, then it shot up as the cash market opened, traded up to the S1. We were already overbought when we kicked off. The market didn't respond, didn't really move that much. It showed some divergence, obviously, because there was no momentum following through here. And then the market moved to the downside until we saw the demand come in here with the market. The stochastics also were going into oversold, and then the market just drifted sideways waiting for the Dow. And there you can see the Dow opening at this bar here, 1430 is there, 3 o'clock, 3:30, followed the Dow down, and then you've got the volume in here, oversold, and then the market moving back. And also overnight, you can see that we've not come back as much as the Dow did at 9 p.m. Nice retracement there, and market moving to the upside with the divergence there as well, which is highlighted there in green. In the 5-minute chart was a bit of a messy one yesterday. As you can see here, we kicked off in the futures market 7 a.m. and then we continued this in the cash market just after 8 for 10 minutes. The market hitting that S1 that I just mentioned in the 30-minute chart. We became overbought. We got divergence. The momentum had dropped off, and it's highlighted to show you that this bar here, as it took off, the momentum didn't go with it, and then we see supply coming into the market as well at this level with a crossover, and then the market reversing and trading all the way back down 150, well, it's actually 200 points if you take the blue lines from the top there. And then the market eventually just trading sideways. A lot of demand through this area here holding the market. You can see there the momentum shifting, bit of a bounce back to the same level to the left, waiting for the Dow just to see if it was going to sell off. And let me just move the chart across. You can see there that we got a bit of a pre-Dow sell-off there. Oversold, demand, crossover, switching back. Again, you've got 89% retracement in here. Overbought, divergence, and selling there with the red bar. And then we switch back, and again we come oversold. The Dow kicks in and moves the market to the downside, and again you've got that retest down here before the DAX closes at 4:30, and then the market following the Dow there. Let's have a look at the S&P. So starting off with the S&P, you can see yesterday we went straight through the 89% retracement. We've got some selling there. We're now oversold to the downside as well. So let's have a look at this in a bit more detail in the 30-minute chart. This is showing from 7 a.m. yesterday, moving down with the European markets and then trading sideways. We came oversold. We were overbought to begin with. Market trading sideways, holding at the BRN there, which you can see the market's back to at this point, and that's going to be the 3,800 level. Notice this as well, that the market's momentum came back but failed to close back above the 20-bar moving average. We didn't quite get to overbought, but again, keep an eye on this pattern, because as a market trades sideways and fails to break out on the upside with the momentum already having moved off the oversold conditions, look for the red at the 20-bar moving averages and you'll see prices then moving down. Now, this is the kickoff of the US markets in the afternoon, so again following the Dow. The market coming back, again you can see it's an 89% retracement there, not quite back again to the overbought conditions, but nonetheless struggling to hold above that 20-bar moving average, and then following through back to the downside where it becomes oversold, and then you see the divergence and also the buying coming in there as well. And like the Dow has moved back to the upside, it's currently through the DP, but has hit that 50 EMA and we've got this real resistance as indicated by these horizontal lines here that the market will need to get through. Now I've had a request to also have a look at the FTSE, so I've combined that into the same workspace. So let's just have a quick look, but I've just noticed something before we do that. Let me just look at the S&P monthly, because if you recall on the Dow monthly we were at the 89% retracement. Well, on the S&P it's slightly different. The area to watch is this 78%, because that's also coincides with the 50 EMA. We're just through the golden ratio of 62% there at the moment, and also yesterday's low on the, last month's low on the, not yesterday, last month's low on the monthly chart there. So let's have a look at the FTSE. Again, you can see that we've got a very similar picture. Let's just have a look, see how far we've pulled back. Again, we're back at 89%. We're heading into oversold territory. We've also got demand there, as well as we did have in the German DAX as well. What's interesting here is that we've broken the 200 MA as well, so that sends us back down into sort of bear territory, as it were. But you can see the last two occasions that we hit the 200 MA, the market was soon brought back, and we can see that it's being brought back as well at the moment. So we need to, if we're going to any chance of coming back, let's just mark this up. So from this high down to here, these would be the longer term upside targets, and you can see 38 tying in with the 200 MA there as well. So let's have a look at the 30-minute chart. And yesterday, as we had the kickoff at 8 a.m, well, this is the futures in Germany dictating direction. The market trading sideways, trying to get some sort of movement to the upside, which we see with demand there. We were already oversold, but there was no follow through. And like I was saying, watch the 20 bar moving average, especially when you've got the 5 below the 20, 20 below the 50, and obviously the 200 is going to be above here somewhere as well. There it is. So you've got all of the averages lined up in the right direction. So when you get into the 20 bar moving average, you can go down into a 5-minute chart, then down to a 1-minute chart, and time the trade at this S1, which is also the S1 level that the German DAX was struggling at as well. I mean, obviously there's going to be a similar pattern to these. There's a few nuances, but otherwise it's exactly the same no matter which market. But the market failed to hold at this area because the German DAX also moved lower, and you can see that we went back into, well, further down into the oversold conditions, down to the S2, which is just tucked away there. And then we saw the market rally. Again, that 20 bar moving average just getting back to overbought, back to red, back to a retest, and this time it was a double bottom as opposed to an 89% retracement. Also, a very important thing to note here, that double bottom coincides with the obviously the low to the left, but look at the momentum, it had shifted, and then we see the market moving back to the upside with the Dow in the afternoon. And again, actually out of all of the three markets that we've looked at here, this seems to be the stronger, because overnight the market hasn't come back down anywhere near the day session low and has moved up quite nicely there, again above the DP and above the 50 EMA at this time. Okay, let's have a quick look at the yen and the British pound, which also came under attack yesterday. And kicking off with the GBP JPY, you can see this trading down to 62% retracement we drew in yesterday. Also at the 20 bar moving average, and also at the 50 EMA, so quite a confluence of indicators there. We got some selling for yesterday. The dollar's having a bit of a breather overnight. ETX have now activated the chart, but it's got a horrible gap in the data. So I'll see if I can rectify that before I include it, because it's just awful to look at. But the dollar yesterday at the 104 level. I'll see if I can pull up a chart of that in just a moment on Trading View. Okay, so we can see that we've got some upside targets here, but you've got to keep in mind that we have the announcement tomorrow evening from the Fed, and depending on what they do with rates is going to dictate the direction of the currencies, of course. I mean, to increase rates is obviously good for the currency, which is why the Fed are doing this. And it's not going to be long before they can't continue with it. They'll have to go back to QE, and the dollar will plunge and the metals will take off. That day is coming. So in the 30 minutes, we were already overbought. We were at the DP. We got resistance. We're also at the 50 EMA. We then switched to red, and then it was a one-way bet apart from a small bounce that we saw here through the 5-bar moving average, but then reversing immediately with a continuation pattern. Further over sold conditions down here as well. Massive oversold conditions. It's just horizontal lines on the bottom part of the stochastic window there. Then we've had a bit of a bounce, and again overnight, along with the Dow and all the other stock markets, the market is moving to the upside there, retracing a bit of the move. We're just coming to around 89%, aren't we? We're bang on 89 there. That's taken from there and projected back. Also, you've got that resistance there to the left where the market's been overnight and failed, but come back and found support at the DP. So a good bounce there from the yen. Meanwhile, the pound straight down to the 121.54, but like the DAX, the FTSE, we've got demand. We're already in sort of oversold conditions there, so again, expect a bit of a bounce off this. Certainly a reprieve today, but tomorrow, well, we'll see what happens with those rates. That's going to determine the direction of the pound. It could be fairly quiet today, by the way, as well as the market waits for the news that seems to have got it all out of the way. You get those Black Mondays, which we saw yesterday. So these would be the potential upside targets today, but you're probably more inclined to actually look at this in the 30-minute chart. Again, like the yen, we were oversold before we kicked off. Crossover back through the averages. The averages all then went into sync and moved lower. We had a bit of a bounce here as the stock markets tried to bounce, but it didn't close above the 20 bar, and then we had the resumption, keeping that in an oversold market. Again, we tried again just at lunchtime. This also failed, and you see the market moving down there once more, but the momentum had switched, and that's the important thing. As the market comes low, watch the momentum switching to find the point where you could grab a few points back to the upside. Here we can see that we moved down, we moved up. That's a 78-89% retracement back to the psychological level of 122, and then the market retesting like the Dow did. This is very similar to what the Dow did, didn't it, on 9 p.m. There you can see the volume. We're oversold, and the pound has moved up back up quite nicely there. Okay, finally, if you're still with me, let's have a quick look at the metals before we conclude. So as I mentioned in yesterday's market alert, they're going to keep monkey hammering the silver market if they can, and yesterday was a prime example of this. We'll look at that in more detail at the moment. Price is back at the 78% retracement at the moment. I'm still holding out for the $20 level, and that could be achieved quite easily tomorrow evening, especially if they go with 0.75% on the rate increase by the Fed. So and yesterday we took off a dollar. As you can see, there was no problem. If we go back to Friday, which is even more important here, we had the CPI numbers here. We had an 89% retracement. The market moved up with the US dollar on Friday, but then yesterday disconnected and went back to the normal relationship. And you can see that we had a big down move yesterday in silver. We got to 22 on Friday. We went all the way down to 21 yesterday. So they had no problem in the afternoon monkey hammering once the JP Morgan and Co came into the office. And there you can see they're absolutely hammered to the downside. For me, it's not over yet on the downside. It's going to be soon, because they'll realise that they can't raise rates. The dollar will collapse, and then the metals will have their day as people rotate out of stocks into the metals to hedge against inflation. Because if they can't continue to increase interest rates, then they're screwed. because they'll have no credibility. There will be no way out. So it's certainly going to be interesting. It's just a matter of suppressing metal prices, the same as gold, which we saw yesterday as well. Absolutely hammered back, which is just bizarre given the backdrop of inflation, hyperinflation, stagflation that they're talking about at the moment. But you can see overnight it's recovering there as well. A lot quicker than silver, which you'd expect. And you'll see trading down to more or less 78% retracement yesterday. Also, you can see absolutely monkey hammered to the downside. And again, overnight, I don't know whether something's been said, but prices at, what time was this? This is 23:30, 11:30 last night. We see gold being tested, but there's no volume there. So that's even more interesting. No selling around is what that indicates. But we'll see today. Like I say, for me, in the silver market, which I still have positions from the last 2 years, it's not done on the downside. I think the $20 level is still open, and that's going to be dependent on tomorrow night. We've got the low there of 20.44, so we're not far off that, and we're not far off going down to the $20 level. So let's see what happens tomorrow evening at 7 p.m. Okay, that will do it for this one. Let me just no, I'll bring the dollar index in tomorrow. I've gone on long enough today. I'll get that sorted, and then when it's more pertinent tomorrow anyway, because it'll be the Fed day. Okay, that's it for this one. Apologies for it being a bit longer, but a lot happening at the moment. As ever, thanks for watching. See you in the next one.